I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, Mr. Nick Hodge, who's also an investor and happens to be the publisher of Daily Profit Cycle. This is the 212th episode of our weekly therapy session that we call Investing in Bizarro World. I almost said investing in dummies, which it feels like sometimes, but no, it's called Investing in Bizarro World, where we talk about markets, what we're investing in, and some of the madness that goes on in our planet. Mr. Nick Hodge, number 212. How are you doing today, sir? It's been a wonky week.
Doing great. Gearing up for spring here. Went fishing this week, which was good, and we'll bring the kids to Legoland this weekend. So I hope everyone else is enjoying the weather warming up and the spring break season that is upon us. How are you, Gerardo?
I'm excited. It's opening day. My Cubs are back. We're playing at Wrigley. It's springtime. Outside of the allergies that we're dealing with here in Austin, things are beautiful. It's almost 90 degrees. I noticed last week, apologies to everyone. I think, J&J, Jerome and Janet, cut our feed off when I was being critical of them at the end there. And, it caused me some technical difficulties. So apologies. Hopefully we have a better week on that front. But no, look, things are great. There's actually a lot going on, though. A lot of what's going on tends to be a lot of what's going on. So let's jump right into it, right? Let's get right into the overall markets. I was reading an article. For those of you that have been watching this show / podcast or reading it, you all know that The Big Short is one of my favorite movies ever, right? And so Michael Burry is one of the gentlemen that's featured in that movie. And for those of you that haven't seen it, it's a hilarious movie. 2, it's based on a true story. And then 3, it's absolutely fascinating because it says a lot about the psychology of investing during what essentially is a market meltdown, right? But Michael Burry was one of the persons that really, really rose to prominence as a result of that Big Short, where he made, I think it was a couple of $1 billion on this trade. After years of losing money on this trade that, investors were upset with him. He was managing a hedge fund. He tied up their money. It was so clear as day to him what was going to happen that he wouldn't let them redeem their funds. And eventually he was proven right, and he made people a whole heck of a lot of money, right? And the movie kind of goes through that. But it was interesting because you and I have been talking about the overall indices, and that's usually your pocket. But he said something earlier this week that was really, really insightful in a Michael Burry kind of way, because he's very, very borderline on the spectrum, admittedly. So he's blunt. So back in January, he tweeted, "Time to sell." That was it. And he doesn't tweet often. And just a couple of days ago, he tweeted, "Was wrong about telling you to sell." And so his premise is that he says he was wrong to tell investors to sell 2 months ago, that he should have gone long, although he's famous for being short on stuff. Do you think he's just early on his sell call and thus far wrong? Or do you think that we're in a new bull market for the overall indices, Nick? I think he was right the first time. I just think it takes a little bit sometimes.
Well, look, that's the classic newsletter rater's dilemma, right?
Yes,
Being
sir.
so early that you are wrong.
Yeah, been there.
And I don't follow his entire track record. I don't know if he started selling stocks back in late 2021, early 2022 or not, because the fact of the matter is we've been in a bear market for over a year now. I mean, it started, frankly, the first day of trading of 2022 is when the S&P topped out. I believe it was January 3rd. Yep. There's that famous trend line that touches the tops of the breakout points that people call the line now. And yes, the S&P has gone back above that, but that happened, I'm just looking at the chart here, that happened in January, but then it went back below it in early March, and now it's sort of back above that trend line. The moving averages say that the S&P is moving up, but I continue to contend that no, we haven't seen the end of this bear market yet, and you continue to see bear market rallies. this happens in bear markets. If you listen to Keith McCullough, for example, I don't know the exact number, but from 2000 or 1999 to 2001, during that entire bear market, there were several of these bounces that you're witnessing now, some of which were even larger than the ones that we're witnessing now. And nonetheless, we look back on that retrospectively as the dot-com collapse, right? Lots of companies went bankrupt, and the NASDAQ was in the bear market for, 18 months or 2 years. And stocks don't go straight up and stocks don't go straight down, right? But the overall trend is still bearish. And look, we're only a week removed from, bank failure, some of which were the biggest since the global financial crisis in 2008. And that credit cycle continues to tighten, right? We're seeing it now start to affect the commercial real estate, for example, and we haven't yet, despite the layoffs we've seen in the tech space, we haven't seen it cascade into the employment sector yet, or the unemployment, however you want to call that. So, was Michael Burry right back in January or whatever he said that? Yeah, I think that. Again, we're still in a bear market, and I know you had mentioned Jim Cramer recently. Look, he
was next.
I have to invite him to my funeral because I could have closed the short on the NASDAQ profitably that he said, short the NASDAQ and I'll see you at the funeral, and now have reopened it, right? So amid this new bounce that we've gotten, and so I guess to succinctly answer your question is, it can feel in the day-to-day grind as though you're missing out, and we still see that FOMO, which is one of the reasons we haven't bottomed yet. We haven't seen that psychologic capitulation. I talked about GameStop last week, for example. It's not until people don't want to buy the dip that you've reached the bottom, right? Like when people start throwing in the towel, like, oh, fuck that, I'm not buying these whatever FANG stocks or meme stocks or whatever. That's when it starts to get like a bottoming process can occur. And speaking of a bottoming process, it is a process. It's not a point in time. And so you're going to see it go lower. You're going to see economic growth continue to slow. We're less than a month away from getting first quarter GDP. That's not going to be a pretty picture. And so, despite, perma bulls and market cheerleaders and people who need you to stay invested, financial advisors, RIAs, whatever it is, on the mainstream news channels cheering for this market, I think you're still in a bear market.
So exercise caution in the major indices sounds like what you're saying, Nick.
For sure.
I like it. Are we near the bottom in the junior resource space? Like, look, there's been some phenomenal stories, right? We always talk Patriot. We'll talk Patriot next week because exactly what I thought would happen happened, except I was wrong about one thing. We'll talk about that, although I have a day left to be proven correct. But if we look across, the venture exchange, right? It's I joked about, sometimes it feels like we're investing in dummies, right? And look, there's a lot of good companies doing a lot of good work and not really being rewarded for it. There's a lot of good companies with some really good assets, and the needle isn't moving. It isn't moving down much anymore for a lot of these companies, but it isn't moving up any higher despite good news often. And so I say all that to ask, do you think we're near a bottom in the junior resource space? Outside of the niche sectors like the lithiums that have done so well and, some of those spaces where we've done phenomenally well?
That's a really difficult question to answer. I think if you look at it through a gold lens, like if you look at the GDXJ or something, for example, that it's bullish. It has bottomed. Could you see a sell-off amid a wider or steeper sell-off in the broader indices? Sure, because gold stocks are still stocks.
Right.
But if you look at the charts, and you look at the M&A that's gone on, you look at the price of gold up above 1950. I think
1980 earlier, about to touch 2000 again.
There you go. As it relates to gold, I think those stocks are bullish and worthy of your capital. Some of the other commodities, the coppers of the world, I think you can still see lower prices in the next couple of months, just because of the external factors, because of the the broader bearishness that typically pulls down the commodity index, for example. And the other thing is time frame. Look, if you want to look at the commodity index, I think it bottomed in March of 2020. I think you've been in the bull market for it's going on 3 years. It's March 2023. And again, and I've said this a bunch too, the last time we had a super cycle that started in the 90s and ran through 2008, you saw some of those gains in the CRB commodity index completely retrace, like a round trip to the baseline before they ultimately made their super cycle peak. And I think that's sort of the phase that we're in right now. We had a nice 2-year run. Yeah, everybody remembers when inflation was transitory and lumber was going through the roof and nickel, and they shut down the exchange. They just started trading nickel again, by the way, on the LME. I don't know if you saw that. It had been shut down since that shit a year ago. Anyway, not to get sidetracked, you're at a pullback in a super cycle across commodities. And so gold is bullish, and you should be buying some of these steep pullbacks in commodities. And sorry if that doesn't answer your question, but if you're willing to trade and be nimble, you can, and again, I've said this before, it was buy the dip in the broad market for 10 fucking years. And now it's sell the rip in the broad market and buy the dip in the resource stocks. So, if you were buying Denison at 95, 96 cents a week ago, you've already made 15% on your money, right? It's funny how that works. Like now you can buy these steep dips in commodities and come out ahead because they're the one that's in the long-term bullish trend.
I couldn't agree more. You actually answered my next question. Is this the time where, whether it's gold stocks or copper stocks, the better names should be getting a good look over? And we asked it last week, right? But I'll tell you on my end, I haven't been as bullish about gold probably in a year and a half. I'm actually, we've written a couple of checks for gold deals recently. Those are long-term checks. Those are not 4 month and a day type plays for me. Those are positions I want to hold, through discoveries, hopefully multiple discoveries. And I want to hold for years for that gold bull market that I think we're running towards. Copper, same thing. About to write a couple of pretty hefty copper checks for copper plays that I think, again, are long-term positions for me. We'll hold those for a couple of years and let the cycle and the pieces hopefully play out. But are you doing the same, Nick? It's kind of a rhetorical question because I know the answer to parts of it because we write a lot of the same checks to a lot of the same groups. But you using this kind of softness, if you want to call it that, to bolster the portfolio?
Absolutely, and to trim the fat, to get out of things that I don't want to be in or that haven't executed, and to really concentrate on the ones that I think are going to deliver hefty returns over the next 18 months to 36 months. There is some fat that has to be trimmed, at least in my personal portfolio. And that's also how you can come up with capital to reinvest instead of having to always, put new capital to your account or write checks out of your savings or whatever. So, I'm positioning for the next leg up of not just the commodities bull market, but the gold bull market as well.
Gold looking strong, even silver flirting with 24. It's at 23.87 on Thursday, March the 30th. Let's get to being right and let's get to being wrong. The Patriot Battery Metals portion of our podcast that all of you write in and comment and, opine on and all of that. I was right about why the delay in results, right? I speculated that it was likely due to them having to retest a lot of the holes, right? Once you get past the 1.5% lithium, they're testing for 2. And then if you get past 2, they're testing for 3. And if it's past 3, they're testing for 4. Well, in Patriot's case, 83.7 meters of 3.13% lithium, including almost 20 meters, Nick, of 5.28%. That's insane. You could just take that slab literally and sell it, right? I mean, there was a 132.2 meter hit of 1.22% that nobody even noticed, right? It's just absolutely ridiculous numbers. The stock moved higher. It didn't move as high, and this is where I was wrong, as I thought it would move. I speculated that if the results were as robust as I thought they were going to be, and they sure the heck exceeded my expectations, the stock would make new all-time highs. It hasn't done it in March yet. We have one trading day for that to happen. May or may not happen. in the end, it's not going to matter, folks. This thing isn't selling for anything less than $50. And look, that high-grade Nova Zone has now been traced over a 750-meter strike. And there's a band of greater than 5% lithium over a minimum 200-meter strike length. We still have assays pending from that east zone. They're now starting to drill out west to expand the deposit that way some more. Everything is looking absolutely beautiful for Patriot. Not much to add other than, holy smokes. You know, sometimes you get results and you're reminded about what a world-class tier 1 deposit should look like. Results speak for themselves. I don't have to say anything else. You can either buy it or not buy it. I think there's a ton of runway here. Say the same thing I say every week. Still own 95% of my position. Added a week and a half or two ago. I'm happy I did that. That worked out well. And yeah, I think there's a lot of room for Patriot here. It's going to be assays the rest of the year.
You should talk about Liontown.
Liontown. Let's talk about Liontown. An over $5 billion Canadian offer by Albemarle. There's rumors that the company had been approached in a more gentle manner, right? And there's rumors, and who cares about the rumors? The bottom line is, Liontown said no. Liontown said, we think that you are undervaluing our asset, and we think that we are worth a whole heck of a lot more than $5 billion. I repeat, look, I think Liontown is more advanced, clearly closer to production, but also I believe that Corvette is going to be a much bigger deposit with much simpler mineralogy, meaning simpler to extract the valuable parts of that deposit. That's going to lead to some of the lowest cost industry-wide, right? They have access to hydropower. They have access, obviously because of the hydropower, to cheap electricity. They have a straightforward mineralogy. Look, Liontown, absolutely world-class deposit, but if that's worth $5 billion, I'll say the same thing I said about Sigma. Then what's Corvette worth? You know, sure, there's a premium because it's closer to production. I can make a counter-argument that being a few years away from production is actually good for Corvette because I don't think demand is going anywhere. I think it's going to continue to accelerate, and I just don't see enough of these mega mines coming online in short enough order, unlike Cathy Wood, for that price pressure that's currently, you know, weighing down some of the lithium plays to continue for more than maybe a few weeks. Like, I think that consolidation is nearing an end. So all things go on the Patriot side. Congrats to, you know, Liontown for defending their asset, and you know, they know what they have better than anyone else. Albemarle clearly thinks highly of it. Albemarle came right back and said, fine, we'll buy more shares in the open market then. And so this is going to get interesting because it's clearly not friendly, right? It's clearly not a situation where they're playing nice anymore. Whether or not they played nice at some point, not quite sure about that. Not my business, but yeah, a lot to like. And now you have, within a matter of 2 weeks, right? 2 to 3 weeks, you have the Sigma, and now you have the Liontown example of some metrics of what majors think these assets are worth, right? And we were missing that for a little bit, right? We were missing that in this new price environment where everyone knows what the demand curve looks like and can kind of project out what the supply curve is going to look like. We're now starting to see some of these assets getting $3, $4, $5 billion offers that are very good quality deposits. But again, I don't believe rival Corvette. And I don't believe they'll rival Corvette for very much longer. I think once that first maiden resource estimate comes out in June, that's going to attach another very tangible metric to what is at Corvette. It'll be a snapshot because the drilling probably gets cut off for the resource estimate here within the next week or two is my understanding of it. And then they'll get to work on crunching numbers. But yeah, like Blair told me in an interview, he said, look, by the time we put out that maiden resource estimate, we would have already drilled another 20,000 meters, right? Which is what they drilled last year. So when you look at that, you look at the pace of drilling, you look at some of these blockbuster numbers that are coming, you look at the continuity, the mineralogy, the fact that, you know, they have 50 kilometers of strike to go play with, and they've really only touched on 3, 4, 5, and now they're looking to connect that. Happy shareholder, the share price can take its time going to new all-time highs. It can take its time going to 30, 40, 50 bucks. it won't matter at the end, folks.
So the offer was at more than twice, almost 3 times Patriot's current market cap, and yet Patriot is going to have a resource that's larger, it sounds like.
Absolutely. With almost 50 plus kilometers of strike to go play with. And pegmatite outcrops that we already know are lithium rich all over the place in the right rocks. I mean, again, you know, I'll echo what Blair said. There's multiple production scenarios. There's an argument to be made that CV13, right? CV5 is where the maiden resource estimate is coming out on. CV13 to the west is probably going to be a good solid 40, 50 million ton deposit, not burdened by the lake, and maybe the great starter pit that allows for a quicker production scenario while CV13 is fully defined and while they go and explore the rest of this district. And Blair was really keen to note in the recent interview that him and I did that the summer exploration program is going to be exactly that. Like, yes, they're infilling, yes, they're stepping out, but there's going to be a good portion of that budget. They have over 60 million in the treasury, and I think another 15 potentially coming in from warrants. A good chunk of that budget is going to go to, you know, quote unquote wildcat drilling to go see what the rest of this district potentially holds. And again, have they drilled the best part of this massive land package? It would be highly unlikely to speculate that their first drill holes that went in happen to find the best ore body, right? In a land package as big as this. So there's the potential, I've said, for multiple Voisey's bays, and I'll continue to say that until that's disproven. Either way, I think, God, we're in phenomenal shape. Nick, it's going to be a fun summer and a fun 2023. Let's see if Patriot makes it out of 2023. I had a friend of ours tell me earlier, I wish we would just get the $50 offer tomorrow because it'd be hard to rebuff that. And that way we could quit talking about it. It's going to be fun whenever it happens. And at the end of the day, I hope we make a run towards putting this thing in production ourselves as opposed to, I say ourselves as a shareholder, right? As opposed to selling it early in what I think is still a major bull market lithium cycle.
Well, it's amazing. You know, this is almost turned into the Patriot Battery Metals show. And at the same time, it is a generational discovery. I mean, it's certainly one of the best discoveries, maybe not just the lithium discoveries, but, you know, of multiple commodities in the past decade. And so, if there were podcasts during, you know, Voisey's Bay times, Diamond Fields, I would imagine that they would have been talking about the price and the events surrounding Voisey's Bay on a weekly basis. And so, in that respect, it merits the discussion that it's getting, and not just by us. You know, I see lots of other folks interested in and covering and talking about Patriot, whether that's message boards or people I talk to. Like, I had a call about an oil deal today, and the guy was congratulating me, but mostly you on our involvement there. Patriot Battery Metals, right? So, I mean, it's out there, and people are interested, and they know the caliber of the deal, and that it's also good for junior mining speculation in general, right? This is the reason that people write checks at 5, 10, 15, 20 cents or whatever to see those 10,000% returns. And so I know we'll continue to try to find the next one. That's why I was having a meeting with a young oil deal.
Yeah, no, listen, hard not to talk about it. I would have loved, right, if back in the Voisey's Bay days, there was a podcast that today, this version of me could go back to and listen to, and just kind of take in the excitement, take in how it developed, and take in some of the predictions, and then compare that with how it actually turned out. That I'm a geek. That would have been fascinating to me to be able to do today. So, you know, for those of us that are invested in the company, have speculated and have done well and think there's a lot of runaway, or for people that just love a damn good story, right? I think this checks all those boxes, and hopefully this is helpful to some of you out there. Some of you have indicated it is. So I think, you know, we're going to keep, with it, much to our friend's chagrin, we'll likely keep talking about Patriot until it either quits delivering or it gets taken out at $50 or higher. Until then, you're probably going to get the weekly updates that a lot of you ask about and check out. And so, yeah, it's kind of where we're at. I was reading a thing earlier and I haven't done the math, so don't hold me to it, everybody. But that 83-meter hit of 3%, somebody was saying that's the equivalent of like 83 meters of 2 ounces gold, right? To put it in gold terms. So, you know, if you had that, then within that, if you had a 19.8 meter run of 3.5 ounces gold, I mean, it just merits that kind of praise, and it merits that kind of attention, and it's going to continue to get it. And, you know, it's been life-changing for a lot of people. So yeah, that's the Patriot update, everybody.
There you go.
All right, Mr. Hodge, where are we at with the tightening cycle before I let you go? Are we, is it nearing its end? Are we a couple of meetings away and then we're done? Or are you still skeptical of that thesis?
I mean, it evolves based on what's going on. I think you get a couple of more quarter-point hikes. It was just this month. I know we're at the end of the month, and it'll be April by the time this comes out. But earlier in March, you know, Jerome was testifying to Congress that he's going to continue tightening. And despite the failure of those banks that we mentioned earlier, he hiked by another quarter point at the last meeting. And the relatively low unemployment gives him the cover to keep hiking. Gosh, I feel like I said all this before, but they're nowhere close to their 2% inflation mandate or target that they put out there. So I continue to think you get a couple of more hikes. I continue to think that we get a really ugly summer in terms of stock market index performance, in terms of economic growth performance, and in terms of unemployment, with more layoffs to come as the year progresses. And that rising unemployment will give him the cover to finally pause or pivot, the thing that people have been calling for over a year that I said wasn't coming. That will come at some point, I think, later this year.
Excellent. I want to leave people with what you're watching for in the markets this coming week, Nick. What are you looking at? What's interesting? What's new?
There's a couple of things. One, I've already sort of talked about the market cheerleaders, right? They talk their book, and for them, it's always time to be in the market. You don't always have to be in the market. It's no secret that I've been holding and have been advising people hold a large cash position. The dollar, despite it not being where it was at 110 or whatever on the DXY index, is still strong and safe and a place to store capital. I hear a lot of talk about flavors of the week, or even flavors of the day, or flavors of the hour, when it comes to all sorts of things. Like, do you remember when Diesel was going to die? Like, it was the death of Diesel, and
they just changed what was going to die every month.
And now that same group is saying, you've got to buy oil now. And they've been saying that for the past couple of weeks, which is interesting because oil has softened up, and we're headed into a recession. But not just that, even some of this doom and gloom stuff. Like, when I talk about a recession or I talk about continued hikes, I'm not saying like apocalypse now. I'm not saying, the U.S. economy implodes. I'm saying we get a 2-quarter recession. I mean, and then we get back to economic growth, because things go in cycles, right? It's not always all or nothing. And I guess that's the real point I wanted to make. It's not always all or nothing. You don't have to be all in or all out. You don't have to be all bull or all bear. Like, there's nuances to this, and things go in cycles. And so, the one this week is the de-dollarization, right? Like, everyone's fleeing the dollar. India's making deals. Saudi Arabia's making deals. And it's like, the dollar's been dying since I got into this business, right? That was 15 years ago. And despite that, you have a very strong dollar. So
it's over 100 on the dollar index, folks. That's a bull market. Anybody that tells you that the death of the dollar is right around the corner. Look, I own gold. Believe you should. It should be, it's eventually you're going to be glad that you own it. I believe eventually the dollar returns back to its intrinsic value of 0. I believe that for all fiat currencies, but it's still king dollar for a reason, folks. And it's still in a bull market. You have to be careful what you believe and when you believe it, because you can be right that it's going to 0, but it might take 15 more years.
Well, and what you do with it, right? Like, what do you do with China and Russia and India and Brazil are banning the dollar? Like, what do you do with that? I mean, how do you allocate capital based on that? Like, how do you profit from that? It's a talking point for, certain people and certain tribes, and people eat that up. And I'll give you an example, and then I know we want to wrap up because we're at 30 minutes. I was on a fishing boat yesterday, and the guide, eventually, some political stuff comes up in the thing, and the guy's talking about the de-dollarization. I mean, right? Because he's probably, I don't want to put words in his mouth.
Yeah.
He's probably zero hedge or, alternative media type of guy, right? And it's like, okay, well, what are you doing with that? Like, that's just something to like talk about on the boat, or are you like allocating capital based on this de-dollarization? What are you doing? Because I'm in a third cash, and the dollar's been great. So just be careful with these, all or nothing stories on both sides of the spectrum, I guess is what I would say. And as far as what I'm watching, it's more of the same. It's bullish gold. It's cash position. It's defensive positioning on the macro side, and that's it.
I like it. There's a new deal that both of us wrote a check for, that I think merits some due diligence for you folks out there. I got it to subscribers here earlier in the month. It's been enough time where I feel comfortable sharing it on the podcast. But, Neil McCallum is the gentleman credited, him and DeRouge Geologic Consulting are credited with staking the Corvette district for, predecessor of Patriot Battery Metals, and Corvette is what it is now. He's also now Neil McCallum, VP of Exploration for Q2 Metals, which is a James Bay lithium play that I really like. It's my second favorite one in James Bay, in large part because of Neil's involvement, because he brought the MIA property to that group, and it's a property that he has been vetting for many years. And so I say all that to say that he's involved with a third and new company that we recently wrote a check for. He's director of a company called Atco Mining. And I just go to atcomining.com. It's a very off the beaten path type of commodity play. It's one part hydrogen storage, one part salt domes. It's a different way to play the clean energy transition in a part of the world, Newfoundland, that is transitioning in a very aggressive way towards that. And then the company's doing, I think, a really interesting job of positioning itself to be a major player in there. The peer comps are going to be anywhere between 50 million and 100 million for companies that are slightly more advanced. The part that gets me excited, Nick, is the company's got a market cap of $5.5 million Canadian. And in this space, it doesn't take very long to actually become an advanced stage play where you put a drill hole, you see if you have a salt dome, you figure out the geometry to it, and then you get to the hydrogen storage aspect of the story. Very quickly, you can prove up valuable economics and metrics to attach to that. I think they're onto something that could be significant. It's high risk, it's high reward. But I'm a shareholder, and it's sticky. It's long term. I'll be sitting on those shares for quite some time. Neil McCallum's got a hot hand. I joked with him that he had to feel some kind of pressure getting involved with a company outside of the lithium space and lending his name to it, given his success at Corvette and the success I think he's going to have with MIA over at Q2. And he said, yeah, but he said, we like to be early. We like to get ahead of trends that we think are emerging, that are going to be with us for quite some time. And we like to be early movers in areas that we think are going to dominate in that space. And he thinks this checks all those boxes. So Atco Mining, $5 million market cap. Let's see where it goes.
Yeah. And just some notes on disclosure, and because someone who listens to this podcast had a question, and it's nothing we haven't said before, but we run multiple businesses here, and we try to be transparent about that. So this opportunity came to us. We ended up writing a check into the private placement. We had subscribers, or at least offered subscribers the opportunity to do the same. And then that was before the company decided to come on as a sponsor of Resource Stock Digest, which is a separate company that helps junior resource firms tell their stories. So there was a very astute reader or watcher of this podcast. You know, when we mentioned a salt deal, we didn't even say the name a couple of weeks ago. The gentleman figured it out, saw the press release, and wrote into customer service asking about that, you know, that transparent factor and why they were becoming a client of Resource Stock Digest. And then I wrote him a nice letter back, thanked him for writing in and explained what I just explained here. We wrote checks into the company and offered it to subscribers well before they became a client of Resource Stock Digest. And we have in, you know, our disclaimers and the terms of use that, you know, those are separate entities, and that, you know, if a company ends up becoming a sponsor of Resource Stock Digest, that doesn't entitle them to be recommended to any newsletter, notwithstanding the fact that, you know, in the case of Atco, we were giving them money before they gave us any money. So we're transparent about that. And again, thanks to that gentleman for writing in. We're happy to take those questions and respond to them anytime. We are like to keep things above board and are happy to explain if you have any questions.
Yeah, and listen, to be absolutely clear, if a company is good enough for my checkbook, then it's definitely good enough for my subscribers, and then it's definitely good enough for us to take on as a client on the media side, on the Resource Stock Digest side, to help tell their story, because we have, you know, a pretty decent network. We've been at this for quite a bit, and you're absolutely right that if I wrote a check, recommended it to my subscribers in a separate publication on the publishing side, a different company, you're absolutely right. I want to help tell that story because I think we can do an effective job of it. And if they deliver, then it gets presented to a broader audience that can hopefully profit from it. We know the junior space is high risk, it's high reward. But yes, important for you all to know the difference between the multiple businesses that Nick and I run, right? We co-own a publishing company. None of that is paid for content. We co-own a media company, Resource Stock Digest. All of that is sponsor-based, right? Sponsors pay us a fee, and in exchange, we help tell stories that we think are compelling for people to do due diligence and make their own mind up about it. And then separate from that, Nick and I, we eat our own cooking. We write checks to a lot of these companies and participate in a lot of these finances. And, you know, it's the same Patriot model, right? Good for subscribers, good for me, good for you. Let's help tell this story. And obviously, they're not all going to work out that way, but all it takes is a couple of those, and you have a nice life for the most part financially.
That's it.
All right. I like it. Thanks, everybody, for watching. I am Gerardo Del Real, along with Mr. Nick Hodge. I'm supposed to remind you to go check us out at dailyprofitcycle.com/subscribe. This was number 212 of our weekly therapy session that we call not investing in dummies, but investing in Bizarro World. Nick, send us off with some words of wisdom. Go Cubs.
Don't go out there and be April fooling around, I guess. Have a good new month.
Have a good one, guys and gals.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.